Are you worried about the recent news on the incoming US recession in 2023? You don't need to be alarmed if you get yourself ready to face the crisis now. In this video, we'll discuss 10 significant recession-proof investments you can consider investing in to secure a better future. As inflation rises, many businesses and industries are affected in numerous ways. The increased prices make it hard for people to afford the essentials needed for survival: groceries, housing, gas, light, water, and medicine. Statistics show that the US economy will experience the highest recession in the second quarter of 2023. JP Morgan Chase CEO says that a recession could occur due to the higher interest rates, inflation, geopolitical pressure, and other factors. United Airlines CEO Scott Kirby is optimistic but says the government might induce a mild recession. Does this mean all hope is lost and the US economy is about to collapse? Not likely. Saving and investing will position you to become ready to face a recession, although no area of investment can escape the clutches of an economic downturn, as industries affected may be unpredictable. However, there are some traditional ways to invest securely. Welcome to 9 to 5 Finance, where we discuss finance and smart investments. Let's dive into the top 10 recession-proof opportunities you need to consider now. Luxury brands. When there is a recession, one would expect that the prices of everything, along with luxury items, will drastically decrease, but that is not the case. Many luxury goods retain their prices because people tend to switch to a more experienced and trusted brand. In 2011, luxury retailers like Gucci, Yves Saint Laurent, and more were the first set of people to recover quickly from the recession in the US. Street Journal magazine explains that although many were trying to reduce their spending due to inflation, other consumers spend extravagantly on luxury goods. You can resell reasonably if you now invest in quality and luxury goods. Grocery stores. During a recession, consumers tend to reduce eating at restaurants and resort to cooking at home. Everyone needs to survive, so even if there is not enough money in the economy, grocery stores will continue to see an increase or frequent visitation from customers. For example, throughout the Great Recession in the US from 2006 to 2010, there was a decrease in restaurant spending by 18%. On the other hand, the spending record for grocery stores was steady and consistent. One of the best grocery stocks to buy now is this space in Walmart Inc. During the COVID-19 pandemic, Walmart saw an incredible increase in sales revenue and noticed a solid 1.5% profit margin over 12 months, making it a lucrative investment option. Educational courses. You can never go wrong with investing in yourself. One of the best ways to take action is by gaining more knowledge and improving your skills. Unsurprisingly, job loss prompts people to take educational courses to upgrade their skills when they lose their jobs during a recession. In addition to improving your existing skills, you can also focus on gaining skills such as graphic design and freelance editing, as these skills are in high demand. Information technology. Whether there is a recession or not, the growth of information technology is outstanding. Skills in the IT industry are always in need, primarily now more than ever, because of advanced technology. The fact is that every company is now a tech company, owing to the introduction of technology into different sectors and industries. Career paths like systems engineering, cybersecurity, software design, and more will always be in need. During the COVID-19 lockdown, Zoom video conferencing recorded revenue growth of over 300%, making it highly profitable. Investing in tech now is a valuable asset that will position you well to overcome a recession crisis now and in the future. Healthcare. Many will spend on healthcare during a recession because they want good health, to live well and be free of discomfort. It may be wise to steer clear of biotech businesses still in the early stages and stick to healthcare stocks with low debt-to-equity ratios. Recessions will likely harm healthcare businesses with more debt and less cash flow, since not all healthcare businesses are created equally. During the Great US Recession, many manufacturing healthcare organizations continued to see an increase in profit because people are still patronizing drugs and health products. One of the top healthcare stocks to consider investing in is United Health Group, with the market capitalization of $503 billion. As of 2021, the annual return on UNH stocks was 45.02%, which is a 50% increase from the 2020 price. Childcare Services. Daycare is necessary for many families, primarily when both parents work. even if it can be challenging for parents to pay for it when finances are tight. Although a parent may need to lose their work or reduce their work hours, they may still decide to keep their children in childcare. Being in a safe and secure setting has many advantages for young children, especially when there is a lot of change that they might not fully comprehend. Thus, childcare is one of the sectors resilient to economic downturns. It is advisable to invest in starting up a daycare business now. Consumer staples. Due to their ability to provide basic needs, consumer staples perform well during recessions. Even if the job market collapses and everyone is out of work, they still need to eat, wash, clean their teeth, and so on. Companies like Procter & Gamble, PepsiCo, Nestle, and more will survive a recession because they deal with the necessities of everyday living. So, investing in these consumer staple companies guarantees a recession-proof. Procter & Gamble's dividend per share has increased consistently with time. It's safe to claim that this stock never had long-lasting unfavorable sentiment based on its performance during recessions. They never decreased by more than 50%, even during the 2000 disaster. Buying gold. Historically, investors have flocked to the yellow metal during recessions and other turbulent times, as gold has been regarded as a safe haven asset. Gold had primarily experienced favorable price movements during recessions since 1971, when the gold standard was abolished. For instance, when the stock market crashed in 2007, gold investment demand rose as people sought a safer alternative. Gold's price more than doubled between 2007 and 2011. Similarly, during the COVID-19 epidemic, when anxiety and unpredictability were at an all-time high, exchange-traded funds backed by gold witnessed record inflows. However, history demonstrates that gold frequently outperforms American stocks and the dollar when interest rates are raised after lagging before the rate increase. Furthermore, excessive inflation is reducing the purchasing power of each dollar, encouraging investment in hard assets like gold. Retail services. Things fail even when conditions are ideal. Something will always require repair, no matter what. In a recession, people may repair items rather than buy new ones, or, at the very least, put off purchases as much as possible. This is why repair services are on the list of viable businesses to launch or invest during a recession. Industries specializing in providing item repair services, such as auto mechanics, roofers, plumbers, and other house repair businesses, are likely to experience good times during a recession. Shares of Lowe's Inc. trade at a reasonable 15.02 times trailing earnings and have a dividend yield of 2.3%. Lowe's is an extraordinarily well-run business and receives a tip-ranked Smart Score rating of 10 out of 10. This suggests that the stock has a strong chance of outperforming the overall market. The business recently declared its plan to participate in the metaverse, where users can assist users in creating project visualizations, and one could result in a significant sales increase. Real estate. If you're an investor worried about recessions, consider buying real estate or other property. For instance, though it isn't a certainty, owning a house you rent out is still likely to do well in a crisis since people still need places to live. Consider dividend-paying real estate investment trusts. Even in uncertain times, it might generate some revenue for you. How long do you think the predicted 2023 US recession will be? If you made it to the end of the video, make sure to write recession in the comment section. Also, don't forget to like this video if you gained something from it, and subscribe for more exciting finance updates and tips.